Welcome back to Factful Finance, where we turn the complex world of finance into digestible insights. Let's kick things off with a surprising fact. Nearly 70% of homeowners don't realize they might incur hidden fees when paying off their mortgage early. If you're considering getting out of debt faster, you'll want to stick around to uncover the potential pitfalls that could undermine your financial goals. Before we dive in, a quick note. The insights shared today are for educational purposes only. Always consult a professional for personalized guidance tailored to your financial situation. Now let's get started. When contemplating early mortgage payoff, it's crucial to understand the nature of your loan. Mortgages often come with prepayment penalties. These penalties can range from a few hundred to thousands of dollars, depending on your lender's policies. For instance, Liam had a 30-year fixed mortgage and, excited to pay it off early, discovered he owed a penalty of 2% of his remaining balance, which was a hefty $4,000. Always review your loan documents or ask your lender directly to determine if a prepayment penalty applies. Another common pitfall is the opportunity cost of using lump sums to pay off your mortgage. Let's say Emma received a $20,000 bonus at work. Instead of pouring it into her mortgage, she chose to invest it in a diversified index fund with a historical annual return of 8%. Over 10 years, that money could grow significantly, over $43,000. Paying off a mortgage early might feel good in the moment, but weighing potential investment growth against interest savings is essential. Also, be wary of how your mortgage interest rate interacts with other debts. For example, if Noah has a mortgage with a low interest rate but high interest credit card debt, it might be smarter to focus on paying down the credit cards first. The average credit card APR hovers around 16%, far surpassing typical mortgage rates. By prioritizing high interest debt, he could save a significant amount on interest payments. Speaking of interest, remember to check if your mortgage is structured as simple interest or compound interest. Most mortgages use simple interest, meaning you only pay interest on the principal balance. However, if you're in a loan with a compound interest structure, extra payments can significantly alter your total cost. Oliver was shocked to find out his loan was compounding quarterly. Extra payments barely impacted his principal, leading him to reassess his strategy. Now let's talk about refinancing as another option to consider. If you're in a higher interest rate mortgage, refinancing to a lower rate could provide immediate savings. However, keep in mind that refinancing comes with its own set of fees, including appraisal costs and closing costs, which can be as much as 3% of the loan amount. Amelia thought refinancing would be a straightforward solution until she realized she would need to stay in her home for several years to break even on the costs. It's also vital to consider your long-term financial goals. For example, James and his partner plan to start a family soon and want to maintain flexibility in their budget. Paying off their mortgage early could limit their ability to save for emergencies or invest in opportunities. Ensuring you have a well-rounded financial strategy is key. So what can you do to avoid these hidden fees and pitfalls? First, always read the fine print of your mortgage documents and clarify any unclear terms with your lender. Utilize budgeting apps and financial calculators to plan effectively, ensuring you have a solid understanding of your current financial health. In summary, paying off your mortgage early can be a great strategy, but it's essential to approach it with a clear understanding of the associated costs and benefits. Do your homework, consult with financial professionals, and weigh your options carefully. What's the first step you'll take toward ensuring a smooth mortgage payoff journey? Share your thoughts in the comments below. Thank you for tuning in to Factful Finance. If you enjoyed today's discussion, why not click the subscribe button so you won't miss out on more insights to help you reach your financial goals. We think you'll find the next video shown on screen interesting and helpful in your financial journey.